Welcome to AM Revenue, your go-to YouTube channel for all things personal finance, business news, and investing. Whether you're looking to level up your financial game, stay informed about market trends, or learn how to make smarter investment decisions, you're in the right place. On this channel, we'll break down complex topics into easy-to-understand, bite-sized videos. Plus, we'll sprinkle in a few jokes along the way to keep things fun and engaging. Expect to find everything from tips on building a diversified portfolio to the latest in economic shifts and insights on how they affect your daily finances. With a simple, lighthearted approach, we're here to help you make smarter money moves without the boring stuff. Stick around for a fresh perspective on the world of finance and business. Let's dive in and start building your financial future. Have you tried to buy a house lately? It's about as much fun as performing a root canal on yourself. If you've recently tried to buy a house, you know it's not exactly a walk in the park. The combination of a limited housing supply, homeowners reluctant to give up their low mortgage rates, and high interest rates have kept many potential buyers out of the market. The Federal Reserve's recent rate cuts were supposed to offer some relief, but mortgage rates actually increased after the first cut in September, though they are currently hovering around 6.69%, still high enough to deter many buyers. Unfortunately, recent housing market forecasts offer little optimism. Realtor.com's 2025 housing forecast predicts home prices will rise by 3.7% next year, with mortgage rates dropping slightly to around 6.2% by the end of 2025. However, it's still a far cry from the affordable housing boom many had hoped for. Similarly, Redfin's predictions for 2025 don't offer much more hope. Home prices are expected to rise by 4%, with mortgage rates averaging around 6.8%. Redfin also summed it up well, stating, 2025 will be a renter's market, and that the dream of owning a home with a white picket fence feels increasingly out of reach. This means that for many Americans, renting may become a more viable option, with potential buyers locked out due to higher prices and interest rates. The road to home ownership is feeling more like a marathon than a sprint, with no clear end in sight. For those of us who are trying to break into the market, it might be time to reevaluate financial strategies and consider waiting until conditions improve, even if that's further down the road. If you're struggling with the idea of home ownership this holiday season, maybe get your parents a gift that'll make them want to keep you around, like a roommate and landlord for life package. After all, they might just have to be your new landlords. TikTok's Montana ban, a precedent for privacy battles. Montana's historic decision to ban TikTok isn't just about keeping kids off their phones. It's a broader clash between personal freedoms and national security. The state's move to ban TikTok on January 19, 2025 stems from concerns over the app's Chinese parent company ByteDance, potentially using user data to influence U.S. politics or pose privacy risks. While this has sparked intense debates about First Amendment rights and fairness, the real-world impact for consumers could be more significant. Many rely on TikTok not just for entertainment and the latest dances, but as a means of income, with influencers and affiliate marketers earning hundreds to thousands of dollars each month. TikTok affiliate marketers, for example, can earn anywhere from a few $100s to a few thousand by promoting products to their huge followings, with a single video raking in commissions from multiple brands. If banned, these creators will be forced to shift to alternative platforms like Instagram or YouTube, which may affect their reach and revenue. Consumers, too, could notice the change. Fewer authentic, spontaneous product reviews, and a shift in how you discover new brands or hear from influencers. As the debate on TikTok's ban spreads across other states, creators and businesses should be prepared for potential disruptions to income streams and advertising avenues. This battle could reshape the digital marketing landscape in unexpected ways. Labor market rebounds and the inflation conundrum. The latest job report brings a mixed bag of news for U.S. consumers. In November, 227,000 new jobs were added, signaling that the labor market remains robust, while inflation stayed at 2.7%, offering some stability after months of concerns. For everyday Americans, this is promising news. Lower interest rates could soon follow, making loans for cars, homes, homes and credit cards more affordable, leaving families with extra cash for other expenses. However, inflation still poses a risk, especially if wages don't keep pace with rising prices. The Federal Reserve's actions will hinge on maintaining this delicate balance. If inflation begins to creep higher than expected, or if wage growth stalls, consumers may find that their purchasing power is squeezed. It's wise for families to take advantage of low interest rates by locking in favorable borrowing terms while keeping an eye on broader economic trends. Job security appears to be improving, with steady hiring trends boosting confidence. For those looking to make significant purchases, this could be a great time to plan ahead. Bitcoin hits $100,000. Boom or bubble. Bitcoin's dramatic climb to $100,000 has sent shockwaves through the financial world, turning the cryptocurrency from a niche investment into a mainstream asset. With supportive figures like SEC Chair Paul Atkins and pro-crypto political leaders like Donald Trump, along with institutional adoption through financial projects like EFTs, Bitcoin has earned the attention of both seasoned investors and everyday traders. But while Bitcoin's surge offers the promise of substantial returns, it also carries significant risks. Bitcoin's volatility, potential for fraud, and regulatory uncertainty continue to make it a high-risk investment. For consumers, the lesson is clear. While Bitcoin can be enticing, don't forget the value of diversifying your portfolio. Cryptocurrency is just one piece of the puzzle. Look at Bitcoin's history for context. Like the infamous story of Laszlo Hanieks, who in 2010 traded 10,000 bitcoins for 2 pizzas. At Bitcoin's current value, those 2 pizzas are now worth an astonishing $1 billion. Yes, that's billion with a B. As investors race to get in on the crypto craze, it's easy to get swept up in the excitement. But balancing Bitcoin with more traditional investments like stocks and real estate can provide stability, especially when the crypto market inevitably fluctuates. Portfolio diversification, your shield against financial uncertainty. Speaking of diversification, diversifying your portfolio is one of the most important principles of sound investing. And it's not just for Wall Street professionals. It's a strategy that anyone can and should adopt to protect themselves against market unpredictability. By spreading investments across different types of assets, stocks, bonds, real estate, and more, investors can reduce the risk of any single downturn affecting their entire portfolio. The principle behind diversification is simple. When one investment underperforms, others may pick up the slack. Think of it as a diversified stew. Stocks are the protein, offering growth but with volatility. Bonds are the base, providing stability. And adding international investments or precious metals give your portfolio the right seasoning. To make it more tangible, imagine you have $10,000 to invest. A well-diversified portfolio might look like this: $3,000 in a stock mutual fund, $2,000 in a bond EFT, $1,500 in an international stock EFT, $2,000 in a real estate investment trust, REIT, and $1,500 in precious metals. This blend of assets can help you weather market storms. If one area, say tech stocks, drops, other areas like real estate or precious metals could provide growth. Diversification helps reduce overall risk while also opening the door for consistent returns. And remember, diversification isn't one size fits all. Your level of risk tolerance should guide how you build your portfolio. If you're more risk-averse, lean towards bonds and low-volatility investments. If you're feeling bold, allocate more to high-growth sectors like tech. In the end, balancing your investments is about creating a portfolio that aligns with your personal financial goals and provides the security you need as the market ebbs and flows. Thank you for joining us here at AM Revenue. We hope you found this video informative and fun. After all, personal finance doesn't have to be a chore. If you enjoyed the insights, be sure to subscribe to our channel so you never miss an update. We're here to help you make smarter money moves, whether you're exploring new investment opportunities or just looking for the latest trends. Stay tuned for more tips, news, and lighthearted takes on the financial world. And remember, your financial future starts now. Let's grow together.